I mean, we're high enough in the silver price for it to have very little upside resistance and be able to just move some more. And it hasn't started yet, and that's got me scratching my head somewhat. I again think it will take place, and it may come out of the blue. Maybe waiting for the tariff thing to, assert what's the real truth. If you're a Canadian company, you mine in Mexico, the silver comes across the border. Is it, tax it or tariffed at 25%? Probably.
Silver prices are at a level with little resistance, meaning they have the potential to surge significantly. However, the expected breakout hasn't started yet, which is puzzling. The movement could happen suddenly, possibly influenced by external factors like tariffs. Uncertainty remains, particularly for Canadian mining companies operating in Mexico, as potential tariffs on silver imports could impact the market. Some analysts predict that silver could reach between $40 to $50 per ounce by the end of the year. David Morgan, a renowned precious metals expert, investor, and author, reveals that the uncertainty surrounding tariffs and trade policies is creating complexities in the market, with unclear regulations leading to unintended consequences. For instance, some Canadian liquor stores have removed U.S. products, highlighting the impact of trade tensions. The lack of clear tariff guidelines, particularly regarding manufacturing and final assembly locations, adds to the confusion. Whether the administration will adjust or backpedal specific policies in response to economic fallout remains to be seen. While a level playing field is ideal, achieving it in today's global economy is increasingly difficult. We present the clips of David's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
An update for the premium service, our paid subscribers, and it was a view of gold as the constant, and what it showed was the S&P 500, and it showed the stock market be by that metric, the S&P 500, and it was a massive head and shoulders formation over a couple decade and a half or so. And what it indicated to me is that the asset allocation is starting to shift. Mike Maloney refers to it as wealth cycles. If you timed it, you wouldn't have to time it perfectly, but it takes timing where you sell your gold. Let's say in 1980, you sell your gold at the top where the gold Dow ratio was 1-to-1. You invest all that money in the stock market, and you ride the stock market from that 850, 873, whatever was low, all the way up to, X. And then at that point, you sell your stocks and you buy gold and you ride it, or you can use real estate or whatever. So the point I'm making is when there's a massive reallocation of capital where most of it's invested in equities, and that moves into, let's say, commodities, that shift usually is years in length. I'm going to guess maybe as far as 2 years ago. And I said the run to gold had started. And what I meant was in those markets, and there's a curve that's theoretical and also empirical, but it's the idealized curve, I should say. It shows like how markets operate, and there's a stealth phase where the early money comes in and accumulates, doesn't really move the price. No one's interested in that particular market. And then once the accumulation phase is over, it starts to be marked up, and that's where maybe some more smart money comes in. So the point I'm making is that central banks have been buying gold like crazy over the last couple of years. And now most people that are involved in the gold and silver markets are aware of that. And now this markup is starting to happen. And at the same time, where I'm forecasting, you're going to see a rollover in the equity markets. And that will force some people, and some people will be ahead of the curve, moving out of that element into commodities, with the money metals being the lead, or at least gold being the lead. For both gold and silver, particularly silver, I talked to talking to one major dealer wholesale, but I've talked to a few, and gold, for example, at the wholesale, I mean, buy a Krugerrand for like $5 or $10 over spot. I mean, it's ridiculously cheap, just because they rather get the cash and not have to carry the loan that they're required to get from the bank to carry the inventory. Anyway, back on point, Elijah. I think silver squeeze 1.0 was pretty successful. It moved the market, started to make a lot of ripples in the market. A lot of people on X were talking about it. And then Roth and Benham came out and said, you need to tamp down the silver market, and then things kind of subsided. This time, my take, Monday will tell, I don't think there's going to be much to it. Could be, might be surprised, but a lot of retail is either selling back or sitting on their hands. They either think that, $34 silver is too expensive, or they bought it at 25 with a high premium, a year or two ago, and now they're seeing, well, okay, I got a $4 profit. I don't think it's going any higher. I'm going to sell, whatever. Can't read everyone's minds, but I know what the market's doing. Very little on the retail side. Banks just keep buying, gold particularly. Even Russia announced a couple of months ago, they're buying silver for a strategic asset. I don't think they use that word, but they're buying the other metals. They're buying platinum, palladium, and silver. So there is a market for it. And it's unusual to see, strength in these metals prices without retail participation. And what usually happens is that there's my moment. Oh my, look, gold's really going. I don't have any. I'm going to have to buy some. Or I sold the house. I don't know where to put the money. I'll buy gold, or that type of thing. So I think we will see a re-entry into the markets, the precious metals markets, via the retail side. But I think it's going to take some type of shift in thinking. I think the people that are in it are more or less burnt out, or just holding on to their gains, waiting to see how high it'll go. And we need a new input into the market, which I just outlined here will be. Because a lot of these stock investors that made big profits or are starting to lose now got in late and say, you know what, the gold keeps moving up. They're going to go, well, you know what, I know what's moving up. Gold is. So it will come back. I just don't know when. Usually the, government that governs least governs best. I mean, we do need some regulations and some ground rules and some objectives, but I think that the more convoluted it gets, the more it gets wrapped around the axle, it becomes more and more cumbersome. So, for example, I talked to some Canadian friends yesterday, and the last couple of liquor stores he went into, the proprietors have removed all the United States-based liquor. It's all Canadian whiskey. There's no U.S. whiskey and whatever else. So it gets to be, I call it a trade war for a reason. And so this really doesn't help. There are ways to make it better. And the whole thing is, have we really implemented these tariffs? And the answer is, well, it's been kind of wishy-washy so far. And is it going to be, aluminum and steel, and it's not going to be the precious metals? We really don't know. It really hasn't been well defined. And then if something is manufactured in the United States, final assembly takes place in Europe, and then it's imported in the United States, do you have to pay a tariff on that? I mean, it's going to get, I think, very interesting going forward to see what really happens and what the blowback and the unintended consequences that come to the fore will be, and what the administration may be backpedaling, let's say 6 months from now, Elijah, say, well, wait a minute, we didn't mean for this to occur, therefore this tariff is going to be, reduced, or won't happen, or whatever. I like a level playing field, but as I just mentioned previously, those are almost impossible in today's.
In summary, the silver market remains at a critical juncture, with the potential for a breakout, but facing uncertainties related to tariffs and broader trade policies. As global markets react to shifting regulations, investors must stay vigilant for sudden changes that could impact prices and supply chains. The coming months may clarify whether policy adjustments will stabilize or further disrupt these markets. How might potential tariffs on silver imports affect global supply and demand dynamics? What factors could trigger the long-anticipated breakout in silver prices? That's it for today. Share your thoughts in the comments section below. If you find this video informative, don't forget to support our MoneyWise team and turn on notifications to stay informed about our latest videos. See you in the following video.